Correct, both. So beginning with equities, where we added some 71 basis points yesterday, that represented an addition of over 90 billion naira to the equity capitalization of the market. In specific terms, that's some 92.88 billion naira in terms of addition to the equity capitalization of the market. And of course, it moderated the year-to-date losses that we've been seeing at some 14.8% in recent times. That also halted the last three consecutive sessions of losses that we had as it ended last week Friday. So it means that we began the week on a positive note, and we do hope that that will be sustainable eventually. However, that looks shaky. But in terms of the volume of transactions, we saw activity level yesterday declined by some 2.92%, in spite of the gains that we saw around the banking names, because if we look at the likes of FCMB, the likes of Stanbic IBTC, Zenith Bank, as you mentioned earlier, they really pushed up the indices. They contributed massively to the gains that we saw in the market yesterday. You talked about Zenith Bank had an interim dividend of 30 kobo being declared. Investors really quickly went into that. They swung into action to get that done. MTN yesterday, we saw some good cross dealings on that particular counter, and that also contributed to the gains that we saw right in the market yesterday. But if you look at the other side of the sectors, in terms of the consumer goods now, we've continued to see serious sell down on that side of the market. They are not really helping matter as we speak. Yesterday, Nestle was down by more than 2% again after losing some 10% on Friday, and that continues to happen. So the gains we saw around the banking sector and, of course, the oil and gas side of the markets yesterday contributed to what's helped us to moderate the losses that the consumer goods segment of the market would have impacted the market negatively with. But if we move on now to the NASD OTC, things are really cold on that side of the market. It looks like that market is really open for more activities, waiting for investors to come take advantage of the low prices on the few stocks or few securities that are available on that platform. Yesterday was down by 0.07%. We had just 3 transactions there, valued at just 32.05 million naira. If we'll take a look at the fixed income side of the market, bonds on that side was sell side driven, specifically yesterday. We got average yields on the benchmark bonds rising by some 4 basis points. Yield on the January 2026 security, which is number 1 here on the radar, we've got it expanding by some 24 basis points to 14.32% specifically, and that's a movement from 14.08%. Explains the double digits expansion that Bosin was talking about earlier. For the treasury bill side of things, was really negative as well. Average yields also rose by some 55 basis points, and investors continue to sell their notes around the short to the mid end of the curve. Bosin.
Yeah, Temple, thank you so much. Keep an eye on the market for us. We'll check in with you at about 10:50 on the show. Thank you so much. Let's see how the market is coming up today. Still chewing over the Zenith Bank earnings, and if that is giving the entire market, or at least the banking sector, some fillip. Thank you. Temple Ashaju out of our studios at the Stock Exchange. Let's take a quick one. We'll take a look at what's just making the downers and the goodies when we return. It's a very long list of burning economic issues, and we have quite a very short time to trash this through with Damilola Kimbami, a member of the economic think tank at Financial Derivatives Company. Good morning, Dami.
Good morning, Bosin.
It's a very busy time for those of you who are in economic research and all of that. Yeah. Inside the country and outside, things are looking a little bit... it's a bit of unease as we speak, isn't it?
Yes, like
looks like the specter of recession and all that is warming around, and we need to take note as well of that.
Yes, like for instance, Germany, according to the Financial Times, is likely to dip into a recession because the Q2 GDP growth contracted by about 0.1% due to a decline in their exports and industrial production. And Germany is very important for Nigeria and sub-Saharan Africa. For instance, it's the largest economy in Europe and accounts for about 2.1% of Nigeria's exports. And we know recently Siemens and the federal government partnered to...
Just about 3 weeks ago?
Yes,
on
power, to increase power generation to about 11,000.
And also the largest energy companies in the world.
Yes.
One of the largest in Germany.
Yes, and so they're partnering to increase power to about 11,000 megawatts by 2023. And Germany is also known for the engines that are used in trucks, they make brands, car brands like BMW and Mercedes.
And the trucks that were used for haulage.
Yes, so Germany is a very important economy, especially even for Nigeria and other sub-Saharan African countries. And if you look at other burning economic issues, we've talked about the president and the forex restriction, and he has clarified that this forex restriction is not a ban on food imports. So at least that has created some sense of calm to an extent for what the president and the central bank is trying to achieve.
Yes.
And also we've seen that oil prices are still relatively below $60 per barrel, and about $59 per barrel, and that's close to the budget benchmark. So if it can inch up above that, I think it would provide some respite for the markets. And we know that OPEC has cut its forecast for global oil demand by about 40,000 barrels to 1.1 million barrels per day. So that's just to show you that sentiment about the global economy, sentiment about what's happening, the US-China trade war is affecting even the oil market and is affecting oil prices. We've also seen that Nigeria's external reserves continues to decline. It's been at a free fall since first week in July, and is now at 44.39 billion.
That's defending the naira at all costs. And some folks are saying, look, we have the price to pay if we have to use this a very tight FX reserve.
That's why you're seeing a lot of forex restrictions. We have right now 43 items that are already on the forex restriction list, and the CBN governor has said that they definitely are going to add more items to that
list.
Yes.
So, based on what I'm reading right now on Bloomberg, saying that, look, it looks like this is 2015 all over again, and that the central bank is going back to his archive and dust off the 2015 playbook to say, okay, we need to start doing some restrictions. You remember 2015?
Oh, yes, definitely.
Really?
Definitely,
you couldn't take more than $50 out of the ATM machine.
So the thing right now is that the objective of the central bank is price stability and also exchange rate stability. So the central bank is trying to balance both exchange rate stability and also build its reserves. But one has to give. Is either you focus on defending your currency at the expense of your reserves, or you build up your reserves at the detriment of your exchange rate.
Very tough time. But let's stick with the food story about food imports, which, of course, first, we don't have enough food produced locally. So we may just put that out there. I got a lot of folks on Twitter asking questions if we have enough food. We don't have enough food produced locally. Even with imports, we're just trying to balance our food books, as it were. But where does the ketchup, for example, one of those that we, and pepper sauces, whatever, surprisingly, we still bring those things in from Europe and elsewhere, which we can produce here.
Yes, so for ketchup, the global brands such as Heinz, which is popularly used, you have Lasers also. But there's actually a local brand that is produced in Nigeria, Vitali. So, and that I think it's literally the only brand that is produced domestically.
So we're talking perhaps, well, I'm going to get a lot of hammer for this. If we say, well, perhaps the Heinz brand of ketchup should go on the 43 item to become 44.
Well, I don't know about that. But the thing is, ketchup is made from, the primary ingredient is tomatoes.
Yes.
Yes, we grow that in abundance. So definitely it's something that can
vinegar, sugar, and assorted seasonings and spices.
Yes, it's made from tomato, sugar, vinegar. But the difference between ketchup and tomato sauce is the fact that tomato sauce doesn't have sugar. So that's the main difference, because sometimes people mistake both.
The ketchup is sweet because, some
other assorted spices
like
added to it, yes. So it's consumed in conjunction with fries, burger, if you're having barbecue. So it's something that is a commodity that is used.
Nigerians love a lot of that.
Definitely, they do.
Oh, come on. Oh, this young generation. Okay, you guys eat all of those things. But we need to produce more ketchup locally.
Yes, and ketchup is just one of the many commodities that Nigeria, commodities that we import that can be produced locally, and I think that's the angle from where the central bank and the federal government are coming from. But the thing there is that they've restricted, or they are planning on restricting forex on this food, on food imports. So restricting it from the official sources. So what that means is that if you're going to bring...
the banks.
And the banks. The banks are part of the official sources, yes.
It's going to, I'm sure the banks will take a bit of some.
So what you would see is that there will be a shift to the parallel market, because these food imports are not banned. You know, that's why the president clarified. Yes, they're not banned.
They're not banned.
You just have to source for your forex from other sources.
So you can still do your Heinz ketchup if you want it, but perhaps the price will go up.
Definitely. So that's it. So we're going to see an
maybe
increase.
The local guys will now produce more.
And the exchange rate has been stable at 360 at the parallel market. You definitely will start to see some weakness, because the demand will now shift from the investor-exporter window to the parallel market.
To the parallel market.
Yes, that's what is likely to happen.
Thank you.
Thank you, Bosun.
Damilola Kibami, a member of the economic think tank at Financial Derivatives Company. It's been a very tough time on Market Street, so I'm going to ask my guests, how are they surviving when the stock market is in a bearish mood? Part of the questions and earnings we're squawking about when we come back.